As I say, a lot in the news. A lot of it's about the SEC right now, is what at least I'm seeing. We had the settlement with Kraken, for example. Now we have just a civil complaint just been filed against Terraform Labs. What is the role of the SEC versus the CFTC? Are you feeling left out?
Oh, we're very busy, so just stay tuned. But I think it's important that in the United States, we have many different federal regulators, all of whom have their important roles to play. We have the bank regulators, the SEC for the securities market, of course, and the CFTC for the commodity derivatives market. So each one does its part, and I think what you're seeing right now is a coordinated effort to really examine the risk that exists in the crypto sector and to make sure that we're using all of the tools we have available.
So let me get specific about one thing: stablecoins. Because they've been a theme through this. And we've seen, as I say, state regulation here in New York as well as federal regulation. Where are you on the question of whether they're a security or not?
So I think not all stablecoins are the same. It's really important to look at each one and see how it's structured. So this is, of course, a facts and circumstances analysis, a technical legal analysis. So there are many stablecoins that are structured as payment stablecoins, which would fall under the bank regulators and payment regulation. There are some that are structured and that the SEC has alleged are securities. There are some that to me seem to be derivatives. And so that would fall under our jurisdiction as well as the SEC's.
Well, I wonder, are there some that are both? As a practical matter, I mean, like Binance, it's called Binance Peg BUSD. I've seen people say that that is both a derivative and a security at the same time. Is it possible to be both?
I think, yes, security-based swaps are securities and they are derivatives as well. But I think I can't speak about any particular token.
Okay, fair enough. But in general, there are things that can be both. That can.
Sure. There are security-based swaps, like I said.
How should we, those of us who are not involved the way you are, regard the question of where these things should be regulated between the SEC and the CFTC? I mean, what's the right way to look at that question?
Yeah. Well, I think it just all comes down to the product analysis, like you just mentioned, right? So the SEC, of course, has jurisdiction over securities in the securities market, and that includes security-based swaps and other derivatives on securities. And there has been, through Dodd-Frank and other legislation, the delineation between the CFTC and the SEC, and indeed there's a long history going back between the agencies all the way back to Chairman John Shad and Chairman Philip McBride Johnson, the Shad-Johnson Accord, where they determined where some of the delineations were between the two agencies. Security futures, another product where that took some time to hash out. So the agencies are used to working together. The industry is used to having to do that analysis to determine what's the SEC and what's the CFTC.
The day that the SEC announced the deal, the settlement with Kraken, we had Gary Gensler, the chair of the SEC, on, and he expressed some general concern about the cryptocurrency area and particularly what it could be doing to consumers. And goodness knows we've seen from FTX to other scandals, if I can put it that way, where people have gotten hurt. Does the CFTC share the same sense of the sort of overall risk right now in cryptocurrencies?
Well, absolutely. So as I've been saying since last May, there are poor risk management practices. There's a lack of robust compliance. There's been outright fraud, as we've seen in some of these cases and these allegations, including that the CFTC has brought. And so what you're seeing, I think, generally across the sector is the regulators bringing to bear all the tools that they have available. So regulators can inspect, they can enforce, and they can regulate. The fastest tool there is the inspection tool. So through examinations, for example, the regulators using their examination and supervisory powers to look at the risk exposures. And then there's enforcement. Now that takes time. It can take years to build an enforcement action. And then, of course, that gets voted on at the CFTC by the full commission, at the SEC by their commission, and then to regulate. And that's a rulemaking process. And that takes time as well, notice and comment rulemaking.
There's a lot of movement up on Capitol Hill about exactly who should regulate this. And I wonder whether in fact, it's perceived at the CFTC and perhaps the SEC as well. You've worked there as well. Is it really a tug and pull? Are you really fighting over turf there? Do you want it and the SEC wants it? Or are we misperceiving what's going on in Washington?
I think that the turf war gets headlines, but I wouldn't really think of it that way. As we've said, both regulators are market regulators, and for decades they have worked out their jurisdictions. And so I think what you're seeing right now is an aggressive attempt, of course, to make sure that the crypto sector falls within the regulatory perimeter and that we are going after activities that are fraudulent. But I don't think that this is some kind of simmering turf war.
As we've been talking here, I've been thinking more about the consumer risk of people, fraud and things like that. What about systemic risk? And one of the things we did talk to Mr. Gensler about was the banks and the extent to which the banks have a role with respect to cryptocurrency. Now, I see the SEC is proposing new rules requiring custody when it comes to some of the stablecoins. Do you give guidance or direction or advice to the big banks or even the medium-sized banks about the extent to which they should be participating in some way in the cryptocurrency market?
Yeah. So the CFTC does regulate banks. They regulate the swap dealing activities of banks, and they regulate FCMs, futures commission merchants that are part of banking groups. And so what we've done through our partnership with the National Futures Association, which is our SRO, is have those examinations into the risks and, of course, the customer protection. One of the things that I'd like to see is for us to do a horizontal survey or questionnaire where we go and we examine and identify for our registrants what types of crypto activities are they engaged in. It's very limited, of course. You've heard the Fed and the OCC being very strong about making sure that the banking sector is not exposed to the fraud and the risks in the crypto sector. They put out the guidance on January 3rd, for example. And at the international level, that question of systemic risk has been examined. And right now, regulators agree that the crypto sector does not pose a systemic risk, but that's the focus on making sure there's stablecoin regulation.
Well, and Madam Commissioner, you make a very interesting and important point, I think. We don't want undue risks, no question about that. The regulators don't want that. Do we know? What degree do we have of transparency so that the regulators actually know where the risk is? Because sometimes when things go wrong, we thought we were regulating, but we just didn't exactly know where the exposure was.
Yeah. Regulators have, like I said, tremendous and broad authorities into getting up information. So that inspection authority, like I said, even if we can't compel from a mandatory basis for people to provide information to us, we can always ask the question. And I can tell you from my personal experience, when a regulator asks you for information, you generally provide it. Now, I've been talking to regulators around the world and asking them about their supervision and oversight of crypto firms because a lot of them have had these registration and oversight regimes since about 2018, 2017 or so. And, generally speaking, the commonality is that there still needs to be more work done to make the risk management programs more robust, to make the compliance program more robust, and to have the right talent in place. But I think this is going to be a catalyst for the crypto sector to identify what's a financial activity and should be subject to financial regulation, just like any other financial activity, and what is something that's fraudulent, what is something where we need to have the greater customer protections.